Guys, I'm paying a quarter for 10,000 Intel. Everyone be like, I got Goldman, I got Merrill, I bought 1, I bought 2, I bought 3. You know what? Pay 3/8 now for 10. All right, stop. I bought enough.
We wanted to know how professionals have changed over time, so we got 3 different experts from multiple decades to share their experiences.
Very typical trading rooms look a lot like a newsroom, rows and rows of desks with a lot of computers on it and so forth. And here, these guys are in sort of an X shape. The trading format is a bit different than just the rows of parallel tables.
This picture, I view it as excitement. Like just massive people, craziness going on. There's no cubicles, everyone's side by side. You can hear every conversation within earshot, and this is what drives people to that excitement. This picture sums it up. You can always tell it's the 90s because all the computers were that yellowed out white. Back in the 80s, you can smoke on the trading desk. In the 90s, you couldn't. The desk, all papers all over it, because you had to have paper on there. You had research reports, something from the analyst. You had buy and sell pads. Here are the buy and sell pads right up here.
Now, when you see them in a Wall Street firm, they'll be, someone might have 8 or 10 or 12 screens in front of them.
I had this exact kind of setup over the last 8 to 10 years as a market maker, and it was just constantly look at screens. You would get dizzy looking at all these screens and numbers. This is the market maker, and this is their order book. All these little lights are the different stocks they trade. Market makers can trade up to 100 stocks, maybe more. And they have algos interacting where they want to buy, where they want to sell. And then what do they have in front of them? They have charts. Why? Because they don't have humans to judge. You need to know price action. You need to know patterns. I see breakdowns here. This is a bad day. You gave me a bad chart. But with these trend lines, these time frames all mean something to the market maker because they need the story that the humans can't give them. And then this screen would be the algorithm of the firm who's pictured here, and here's a list of important numbers.
You can see here this phone deck. It has a very large number of buttons here. I'm missing, it's got about 50, 60 buttons. And these are direct lines to either a floor broker or an upstairs broker or a institution and so forth.
Each button would have a direct line to say either Merrill Lynch or Smith Barney. So if you wanted to reach that trading desk, you just hit the button and they would see it ring and they would pick it up on their end. There's no hang up on the phone. You would just, when you popped into the turret light.
One thing that's still there today is this keyboard. This keyboard can take a beating. As a clerk, we used to hit it 40, 50,000 times a day. It was an ABCD order, and it had different buy order, sell order, buy market, sell market, and every time you hit done, the stocks would then execute. And this keyboard is still there for show. But, it is an iconic part of my career, getting to beat on this thing.
In the 80s and early 90s, it was within very broad strokes, pretty much anything goes. Sort of a crime. Almost everyone's male. There's a lot of locker room talk. There's a lot of sexist, misogynist talk. A lot of talk about sports. And HR pretty much, it barely existed back then.
It was pretty much really anything went sometimes, I'm not going to mention specific stories, but, making fun of someone's religion possibly could be thrown in there. Maybe someone's sexual promiscuity could be thrown in there. I always joke around with some guys that if you could take the trading desk in the 90s and throw it into today's environment, what went on, the seats would be empty because everyone would be in HR. We got away with a lot more than other places probably could have gotten away because that was the culture.
And I kind of remember the point in time when that started to change, certainly in the 90s, actually as a result of Bill Clinton's presidency and the Monica Lewinsky scandal. I think society changed a lot then, and it affected the trading floors as well.
It was kind of a college fraternity. Stuff that we did would not fly today with human resources, nor should it. I didn't like getting bossed, running out and getting all these orders and coffees, but it's what made me have a thicker skin, made me tougher, and made me learn about the personalities around me. Now, we don't do that to interns. We put out nice LinkedIn posts and we welcome them and we thank them for their service. You can't do the stuff that we got away with back then. And, fire codes be damned, the amount of people we packed in there, I don't know if that could fly either.
So I'm looking at this gentleman here. He's actually gesticulating while he's holding his cigar. But yeah, it was quite common amongst sort of more middle-aged fellows would smoke cigarettes. Here he's just kind of a class. He's got cufflinks on, and he's smoking a cigar. Also was quite typical back then, very old school. Someone would come by and offer to give you a shoe shine. Most people wore suits, typically, gray or blue, and sometimes pinstripes, and with a rep tie and a fairly conservative shirt. If you recall from the Michael Douglas picture from Wall Street as Gordon Gekko, with the contrasting white collar and striped or solid colored blue shirt. Those were very common. I quite liked those, actually. Hermes ties were very big. Well, there were a lot of suspenders back then.
I sported suspenders on some days. A lot of guys like to mix it up with, their socks was a fashion statement. Red socks, orange socks, yellow socks, things like that to accessorize the mundane blue and charcoal gray suit.
On the West Coast, of course, the VCs were way ahead of us. Casual Friday was every day of the week for the VC guys.
Casual Fridays, that came about more towards when the dot-com era began. Wall Street decided to try to, I guess, dip their toe in the water, and they gave us Casual Fridays. So you were able to wear not anything you want, but, khaki pants and a casual button-down shirt. That was exciting, believe it or not, how simple that was. It was exciting that you have to wear a suit. Well, we found out on Casual Fridays how some people dressed when they were home on the weekends, and sometimes you were shocked what was in their closet. Just their choice of patterns or colors that they chose to wear to accent their khaki pants, so to speak. We would be like, oh my God, I can't believe John Doe dresses like what? That was in his closet?
Okay, you got me in my turquoise IMC smock from 2016 to 2020. Each firm has their own color, their own uniform, if you will, but the smock is just how we identify myself. I had about 7 different smocks, 4 different colors. We like our dark colors. This was a little flashy, so for you, I get to wear it. But seeing those different colors are just uniforms. It's these badges that meant something. Everyone had a badge number down there, and I knew people, not by names first, but by badge numbers. The number's important because when every trade was executed, you had to write down the number of the executing market maker and the brokers in your crowd, and that's how we trailed orders and kept things orderly. So in front of me, we have, wow, this is kind of bringing me back. Some of my badges during my time as a market maker. My first firm, Spearleys and Kellogg's, they did have a little hierarchy there at the exchange. It doesn't exist anymore because there aren't that many people. But the light blue is a floor official. I would get involved with 2 other floor officials to settle a dispute. From those floor officials, they have a panel of 12 governors. So you have the blue stripe, then you have the green stripe. And I was elected a governor sometime, I believe in 2012. And that was, it was cool for my firm to have that representation amongst that floor community. And it meant something back then. By the end of my career, I got voted to the top position there, and that was one of the greatest honors. That's that red stripe you see here. You can see where I have power when I know the badge guy and I get my real name, Jay Woods, up there. So no one's calling me Jimmy or James when they come into my crowd, which is what people would do.
Most people didn't really understand what it meant. Oh, so you're a stockbroker. No, I'm not a stockbroker. But that would be sort of the first uninitiated reaction would be. For people of mine, for example, that were lawyers, they would understand what it was. And what I particularly did, which is, mostly at that time, the big plays in the 1980s were corporate takeovers and LBOs and hostile bids and junk bonds. Those were the dominant themes of the 80s.
I think everyone's general consensus would be, fat cats, cocky people, out for themselves, excessive partying sometimes in some aspects.
Do you feel like that was accurate, or?
A good percentage of it, yes. 80%, 75% accurate in some aspects.
Really?
Yeah. A part of it for everyone, I guess. Some had it more than others, but I think the traders or people in finance are one of the more generous people out there. A lot of it's unfounded, and a lot could be founded, I guess.
Yeah, that was an interesting time. Occupy Wall Street. Wearing a suit in Lower Manhattan, you were enemy number one. I was yelled at as I went into the exchange many times. Someone called me a terrorist banker. That was a funny one. I'm just a guy that trades stocks and I go home. So it was, it was a wake-up call, though. It definitely changed how the firms I worked for looked at compensation. When you work in such an iconic place and are at the, image of capitalism, that iconic center, that's where I would go if I wanted to be heard. And these people were heard. Didn't change the landscape, but it definitely made people think about risk management. Definitely got a lot of people talking about things that weren't discussed beforehand. And personally, it was frustrating walking to work, getting hassled and yelled and screamed at when, some of the things I kind of agreed with, other things, maybe not so much. I thought a lot of it was misguided. Some of the thoughts and some of the, broad strokes we get painted with are a little ridiculous. But, message was received. It was not a fun time, that's for sure.
In 1982, $18,000 a year.
Was that enough?
No.
Did you get a bonus that year?
No.
$35,000 plus bonus. The bonus my first year, $5,000.
Was $400 a week, $22,000 a year. It was tough back then. I think my first bonus was $1,000. I had worked 6 months, and I remember bragging to Mom.
The boss would say, we want to get long X amount of stock XYZ. We want to do it with the maximum option leverage possible. So you look at your screens and the markets for all these various options, and then you'd call down and get some color. What's the liquidity? That's really the key thing in options. What's the liquidity? You don't really care so much who's on the other side. And then you'd call down to the CBOE in this case, and start giving orders. You could give orders, for a particular option, you can give them market orders, you can give them limit orders, you can give a spread order, and then you might trade in and out of it a little bit as you're getting your position done.
Prior to the electronic trading, it was more verbal and conversations back and forth. If you got an order in a stock, you have to go out to buy it. If you needed a hand, you say, guys, I'm paying a quarter for 10,000 Intel. Everyone would be like, I got Goldman, I got Merrill, I got Morgan Stanley. Great, you're buying the phone. I bought one, I bought two. They would put their individual orders into our in-house system. It would come in there and you would see how much you bought. If you bought 5,000, depending on your order, you're like, okay, well, maybe we have to do, you know what? Pay 3/8 now for 10. And then everyone's like, I got so-and-so, I got so-and-so. And then, all right, stop. I bought enough.
How long does that all take?
60 seconds, tops. Now, with electronic trading, the order would just pop up on your screen and the sales trader would be like, Jack, do you see the order? I got it. It was still fun, but it just was different. The conversations diminished more.
When I first started, you would actually have a physical order, physical piece of paper. And there were clerks around the perimeter of the room. Those were the retail brokers, and they got orders from the public. They got orders from institutional desks to buy and sell individual stocks. So those retail clerks would get the orders from their customers. They would write it down. Yes, we would write things down. They would hand the ticket to a broker, would see the instructions, and they would try to get the best price for their customer. I was the conduit between those brokers, and I would get a buyer and I'd get a seller, and we would negotiate. The retail guys, the trading, the paper, that was the greatest thing. We had janitors come and sweep the floor almost every hour because the trash would pile up. But we went from paper to a digital system that made things much more efficient and made volumes explode.
Back then, you had to fill out a slip of paper. The multiple sheets, white, yellow, and pink, and you'd write down what you're doing. I'm buying, 10,000 of XYZ at, 50.5 limit. You'd check it off, and then you'd put it in a box. And one of the clerks would come by and pick that up, and the white paper would go this place, the yellow this place, the pink that place, and it would get, reconciled. Well, there were errors made in buying it or selling something or anywhere along the line. Most of the errors actually were not so much done on the trading floor, but then on how you recorded it. And that was sort of a whole different area of the firm that would take care of that the next day. And I think the term that was used for that, I'm sure it's used now too, but it's just much rarer, is called breaks. You have to reconcile the breaks. The sides of the trade don't recognize it.
This is where the biggest fights were. You said 15, no, I said 50. There were discrepancies, so I had to remember things, and I had a photographic memory when it came to numbers. Back then, everyone was sharp.
Just say this is Intel. So these are the participants that would be trading the stock. We'll use Goldman Sachs, Morgan Stanley, Merrill Lynch, and this guy could be Payne Weber. Each firm has a 4-letter symbol. So this would be the offer. So the bid here would be 35 1/8. Okay, so here is a similar version of what a trader would see back in the 90s on their screen. I would have to go into the market to buy stock. So I would yell out for a hand. I would say, I'm paying a quarter for 10,000 Intel. I have Goldman. Some other person would say, I have Morgan Stanley. I have Merrill Lynch. All three of us would dial in and we'd say a quarter for 10,000. Goldman would say, I sold you 1,000. So he said, sold you 1,000. Then Goldman would move his market to wherever he wants it. He can make his market now at 3/8, or he can go and now he could join the 8th bid. And then Steve over there, I bought 1,000 from Morgan Stanley. Now I bought 1,000 from Goldman, 1,000 from Morgan Stanley, and then Merrill Lynch says, I sold you 2,000. And everyone moves their market. So I buy a total of 4,000. So now all the quarter offerings come up. The stock is moving up. The next offer now would be at 3/8. Being that there's no quarter offerings, now people put their bid up to a quarter now. It's like a seesaw. It just rolls like that. I can go also and say, you know what? Pay 3/8 for 10,000 now, and then take it up even further. And then these people would move their market, and anyone can go now 3/8 bid, and now whoever's at a half, now the market is 3/8 a half. They would call 35 the figure. You know, you don't really care about the figure so much, you care about the fractions. You don't say 34 1/4 for 10,000 Intel, you go Intel a quarter for 10. Everyone knows that 35 you don't mention.
The forerunners of the trading today, which is essentially all electronic, was started back in the 80s. One was Instinet, which was the first electronic order entry system. And then in addition, the New York Stock Exchange had something called the DOT system, designated order turnaround system. And that was you could put trades directly to the floor from another system. That was the system that was first used for the first stages of program trading, something that's morphed into high-frequency trading.
Back in the 90s, there's only basically 2 ways to buy a stock. Either you bought it in the street, but also there was an anonymous behind-the-scenes machine called Instinet that people can buy or sell stock anonymously. Whereas when you go out into the street, you can figure out who is a buyer or a seller of a stock. Whereas Instinet, you could buy 1,000, but you don't know who you bought it from. If you're known to be a buyer, other people can run ahead of you and push the stock up and it can get away from you. Whereas Instinet, it's done on the side.
I was replaced in a sense by algorithms trying to trade like I trade, trying to come up with programs. You used to be able to go to the floor of the New York Stock Exchange and you could feel a buzz in the room and you could hear that something was coming. We just had a day where we were up 9.5% and the floor of the stock exchange started to roar. We went up like that on a tweet and all of a sudden, boom, and it kind of got me back to the way it was, but it didn't last very long. And then you're hearing beeps and boops instead of yelling and screaming. And then you had to embrace the new technology. A lot of the old school guys couldn't. They were pissed when we went from 8s to 16s. You're cutting my profits in half.
We were in 8s and quarters back then, not decimals like now.
We went from the 8ths to the nickels to the pennies.
Back when I started, it was an 1/8 and a quarter, and then it was a teeny and 2 teenies, and then we went to pennies, which just blew the doors off the world. I'll pay a nickel for 5,000 shares, and so I'll pay 6 cents, and then you just look at the guy and you just want to punch him in the face.
Electronic trading didn't make it trade in nickels or pennies. It just was people were getting tired of the spread. They thought they were being charged too much. So they said, why don't we trade it in nickels? Then it went to nickels. This all sort of coincided with the advent of electronic trading. It just was, people was saying that's way too much spread. So they went to nickels. And then after it went to nickels, everyone knew that it would eventually go to pennies, where it is now.
Do you need to be on the floor of the New York Stock Exchange? The answer, sadly, is no. How do I know this? COVID. The floor of the stock exchange shut down for about 10 weeks. March 20th, 2020. That was the last day we had humans there, and then we had to go. And this was an epic moment, because one of the things we take pride at the New York Stock Exchange is that human element. With the human there at point of sale, you have someone at the controls. One, someone to blame, because we always want to blame somebody. Oh, the guy on the floor did this to me. But the fact is, every open, every close is watched with human judgment. Every volatile situation slows down and the humans take over.
Pretty substantial in terms of shares per day, much less than it is now.
The volumes just, they jumped every year. You had more companies becoming public, so that expanded the volume. More people became more attuned to investing, and with the 401ks, boost volume to where it is, today. Now it's on steroids.
Oh, I can't even tell you what the volume is today. It's just constant, and the volume has changed. The volume back in 2000 was bigger blocks, more sizable trades. People took their time when trading. Now, people come into a crowd, I get 20,000 to buy, I'll work it over the day, I'll let the algorithm do the work, and they'll piece it out into orders of 100 shares over time and try to get volume weighted average price. That was not a thing in 2000. 2000 was fight for price, get the best price. If you did well, you get more order flow. And if you didn't, well, someone else can do a better job. So there was a lot of pressure. Now it's just be average. And who wants to be average? I didn't go to school to be average. So.
Probably 60% of trades you see on the stock exchanges are high-frequency trading and other program trading. Even more of a change is in the option markets, which have exploded, even greater than equity trading. They have options on a much wider array of instruments, single stock ETFs, single stock ETF options. There's basically an option on everything. You can buy an option this morning and it expires at the end of the day. So it encourages very short-term trading. Things would get backed up back in the 80s because there was very little electronic trading. But now there's sort of no limit to the amount of trading that can be handled.
It was high pressure, yes. You had to pay attention, you had to hear multiple conversations in the room, but that's what made the job exciting.
This is almost the face of a bad day. Distressed traders, they love the face of the bad day. Whenever the face of the bad day, you put your head down like this, you could be looking at the news, you could be, oh my God, my lunch order was wrong, or why do I have to go bring milk home? But there were photographers that they get images like this. I punched computer screens, I've yelled, I've screamed, I've whined, I've cried. Where did I lose this hair? Great question.
I had a bad habit of breaking phones. It was this big, huge, heavy phone, and with like maybe 8 buttons on it that you could program. It cost like $3,000 to replace. I broke a couple of those. My partner said, we're going to start charging you for those. So that, I cut it out after that. They were hard to break too. You really had to slam it.
I personally have never broken a phone. I haven't seen many phones broken. I know it's out there. People have tried to break it, but some have. I've never seen anyone succeed. Maybe one time I've seen someone succeed.
I would lose my temper in response to my perception of a mistake that was made by a broker on the other end. That they missed something that they were supposed to catch, or they didn't buy enough, or they bought too much. In other words, they effed up some way. And I would scream at them and break the phone for a couple times. Coatron machines, which was sort of the bread and butter, the Chevy Impala of trading screens. Pretty basic. There were a couple other machines that I'm blanking on. They didn't survive. They would try to offer up something that you could use for better analysis above your position than the Coatron, which is pretty much of a dumb terminal, as I would say. And obviously, the Bloomberg is the extreme.
The Bloomberg terminal gave you every facet of any company financials that you needed.
Here's my close with the Bloomberg screens that are developed by Bloomberg and the Bloomberg proprietary keyboard. On the left screen, you've got quotes. It's obviously a good day in the market because it's mostly green. You've got the news scroll going on the bottom. You've got a couple of charts that this person's following. And on the right screen, you see here that these are cross-currency rates for basically every significant currency pair out there. We actually got a demonstration at the Bloomberg offices from Mike Bloomberg himself, and it really has been revolutionary, and that's why I can't even keep track of how much money it makes, but it's It's a monster. It's expensive.
We at Cowen did not have personal Bloomberg terminals for each person. There was one on the desk, but each person did not have an individual. Other firms, everyone did have a Bloomberg terminal. Probably it was cost prohibitive for them to have a terminal for each trader. I'm a little jealous that I wish I knew more about it.
Each firm has their own systems that they pay for. It could be Refinitiv, it could be Bloomberg. But there is one uniform system that the market makers and the brokers are on, and that's an exchange-based system, because all the orders come through one centralized location and routed to one spot on the floor. So the main screen we look at, every market maker has the information about the stocks as they trade, imbalances to buy and sell, goes to the individual firm through exchange technology. I'm not that smart to explain what that is to you, nor do I care. I just care about interacting with it and that it works.
In terms of news, the way you would work was you would subscribe for different news services, and the main ones that you always had were Dow Jones and Reuters, and breaking news would come out. And if you look here today, it could say, Meta reports earnings of 135 versus 120 expected, something like that, or trading stopped in XYZ, waiting for news, something like that. Those would appear on your screen. And sometimes Reuters would have the news first, sometimes Dow Jones would have it first. Eventually, Bloomberg had developed their own news service, which is probably the best one now.
In the 90s, most of the financial news that we got was either from our analysts reading the journal headlines and having a TV on the desk that had CNBC on.
I would go to Twitter, and we weren't allowed to have these out on the floor of the exchange, so it was very frustrating. I'd get alerts to my phone in the stocks I traded, and I would occasionally look down where I could feel the vibration in my pocket. I'd set alerts to my news wires to see what was going on.
The Motorola Dynatech, you had about 15 minutes of talk time, and it took several hours to charge to get that 15 minutes of talk time. It's heavy, it weighs a lot, can't really keep it in your pocket. The scenario where it would potentially have value would be if there was something breaking news, typically from a courthouse, a ruling on a particular aspect of a takeover battle, and you could get the information to your trading desk to make a trade faster than if you had to queue up for the very limited number of payphones that existed back then. And there are not a lot of these around, to be honest with you. But did it pay for itself? Probably. These were about $3,500 back then, like $1985, which would be, I don't know, what, like 15, 20 grand today.
Did you ever break one of those?
No, too expensive. I think I'd already broken a couple of the old-fashioned desk phones then, and I sort of put the breaking phones thing in a moratorium box. Yeah, Wall Street, the movie, and I remember going to it on opening night, and it was a sold-out screening on Upper East Side. It was a very good movie. It captured a lot of what was going on at the time, both in terms of the sense of what the trading floor is like, other sort of ancillary things, maybe not so wholesome sometimes, and then the insider trading aspect of it. It was quite well portrayed. So that would be the archetypical movie for Wall Street in the 1980s.
So I guess the only movie I can think about is Boiler Room, but that movie gave you a vision of very bad trading firms, like they were called schlock houses, that just preyed on the elderly. And so that was not an accurate representation of your Merrill Lynch's, Cowen's of the world, or Morgan Stanley's. That was the fringe aspects of no-name firms that people didn't really want to partake in.
I'm not a big Wall Street movie guy. As somebody that's worked down there for so many years, it takes the best of the bad actors and it makes it into something. And there were so many great people down there that it doesn't really do us justice. But The Big Short, to me, not just because the great actors in the movie, but I lived through that, and I was on the floor side of things, and then the human element. When my firm went from 330 to 15, these were people that were at my wedding, people that were at kid events, people that I got to know, on the closest level, that I went to battle with every day, and I had relationships with outside of the floor. they were losing their jobs. They changed careers. I was blessed that I was able to pivot and maintain it and still be happy doing what I'm doing. But the movies that look back on the financial crisis, to me, they're relatable because I see the brokers at Bear. I see the brokers at Lehman that used to come into my crowd every day.
Yeah, there was a lot of going out, drinks with the guys at various joints, different places, different nights. There's a lot of action going on in the office, so people had a lot of steam to blow off. And so that's sort of a natural release. And especially when you're younger, you can handle going out more. A lot of going to sports games, different events. When I was sort of strictly on the buy side, we were trying to be entertained a lot. I'm sure they still exist, but it's much less likely that your broker is going to be taking you to a strip club now than back in the 80s, because everything is known, and that's not something that most of the firms would look kindly on.
Come to work, usually Thursday nights were always pretty much a big night out. Usually for happy hour, it would be typically someplace local to wherever your office was, and we were right above Del Frisco's Steakhouse. For the first 2 weeks, we would all meet down at Del Frisco's, for a happy hour. And then after 2 weeks, the gentleman that ran the department, we had a morning meeting, which we did every morning around 7 o'clock. He came in, and I'll never forget, he goes, "Guys, I love that you guys go out together and you hang out and you socialize." He goes, "But I'm looking at these T&Es that have been in." He goes, "You got to find another place to have drinks." Because Del Frisco is so expensive. Back then, they were like $12, $14 a drink. If you're with a customer, being an institution, you can hand in that expense report, nice steakhouses, Yankees games. Oh, I think everyone took advantage of the policy. You would fudge it. There could be one customer there, but you would add 2 more. It would make sense to have a bigger bill.
If I, someone felt I ripped them off, and then they're going to come back at me. And if I felt someone was doing something wrong, I would have words with them. And we would go out to the bar. We'd go to Yankee games in the 90s. As a young clerk, I got to go see a lot of great Yankee games. They were pretty good back in the 90s. We would have those relationships, but then from bell to bell, we could battle each other, and that was fine. We had a mutual respect, and I have to work with you the next day, even if we had a bad day today. Now with computers, you don't know who's on the other side of these trades. You don't care.
I did. Once I got to a place where I fit in right with the other folks, and they like me and I like them. Yes, I liked it a lot. I'm more of an analyst probably than a trader, but I like the trading aspect of it because you could find little seams between something.
Yes, it was fun. It was fast-paced. And every day was different. You didn't sit in a cubicle working on a report that's due in 2 weeks. Every day was there. It was real. And when something happened, you couldn't go back and change it. That's what caused the pressure, but that's what made it exciting.
Oh my God, I love my job still. Trading on Wall Street, back in the time periods that I've been involved in, each time period has its own group of characters, its own story, and I would go back in a time machine tomorrow to get back to open outcry, pen and paper, 8 spreads, my God. I loved every minute of it. I love the trading, the highs, the lows that go with it. It's exciting. It's what makes this country great. The S&P 500, 500 of the greatest companies that trade here. It's the most exciting job in the world, and it's the most exciting place to be in that iconic building every day. I walk in, to me, it's the Yankee Stadium of Finance. If you're from Boston, I stress, it's the Yankee Stadium of Finance. It's the greatest place in the world. Clearly biased, but I wouldn't trade it for anything.